Hey everybody, Mike Thomas, the godfather of cryptocurrency, and today we're going to talk about the principles of trading in cryptocurrency. Now, while trading in cryptocurrency can be both exciting and financially profitable, there are some fundamental principles that you've got to keep in mind in order to avoid a lot of the built-in pitfalls. Now, like I said, I'm the godfather of cryptocurrency, and today I'm going to share with you 6 basic principles of successful cryptocurrency trading. First and foremost, it is imperative that you set long-term investment goals. Let's face it, it's very easy to become overly excited or even panicked in the volatile and fast-paced cryptocurrency market, which is why having achievable 2 to 5 year goals and strategies are necessary to keep you from being subjected to the whims and unpredictability of the market. Okay, secondly, you must have a clear understanding of your personal risk tolerance. Okay, a good rule of thumb is never invest more than you're prepared to comfortably lose. Back to rule number 1. Cryptocurrency trading should involve a long-term strategy. Therefore, you don't ever want to risk funds that may be needed for next month's mortgage or car payment, okay? By understanding and adhering to your risk tolerance, you'll make better and more level-headed decisions. Okay, the third basic is always control your emotions. Quite honestly, if you adhere to to the principles 1 and 2, the first and second ones, this one is a no-brainer. Emotional trading occurs most often, when there's no long-term strategy or guidelines for risk tolerance. Now, as you may already know, the cryptocurrency market moves swiftly and unpredictably. So if you aren't anchored by these key fundamentals, you can find yourself trading impulsively and erratically, and neither one of those is a recipe for success. Okay, number 4, handle the basics first. In other words, don't just go run and dive headfirst into the deep end without even knowing how to swim. Okay, do some homework. Learn the ins and outs of maneuvering the trading platform that you're using and understand market trends, analysis, and statistics. And above all else, buy low and sell high. Okay, now the 5th principle for successful cryptocurrency trading is to diversify your investment mix. This rule applies in most areas of investment, not just cryptocurrency. Diversification smooths out the eventual ebbs and flows and unpredictability of the market. If the market tanks in one area and you have investments in others that can sustain you, you're ahead of the game. Furthermore, it's wise to separate your portfolio into low risk, low yield, medium risk, medium yield, and higher risk, higher yield categories. The percentage of participation for each category, it should be contingent upon principle number 1, your overall risk tolerance. Okay. Now, the 6th and final principle is to avoid leveraging assets to sustain your trading. Okay, principles 1 and 2 advise that you understand your risk tolerance and control your emotions. Remember this when you're tempted to leverage assets to increase investment levels. Never, ever obtain financing, especially from somebody like a loan shark, in order to buy more cryptocurrency. It's a huge mistake, and it's a slippery slope, and it can lead to financial devastation. In summary, understand your personal risk tolerance. Control your emotions when trading. Learn and master the basics first. Diversify your investments, and always avoid leveraging assets to increase your investment. If you'll follow these basic principles, you'll be off to a fantastic start in crypto trading. If you don't, you're going to end up in trouble. Now, for a warning before we end this. The fast pace and adrenaline rush from cryptocurrency trading, it can be addictive to some individuals who don't practice the basic principles that I just outlined here for you. So I urge you, avoid sitting in front of the computer and getting zombie-eyed 24/7, okay? Not only will the fatigue lead to poor decisions, but it's the hallmark of gambling versus trading. Gambling in the exchange is evident in people who trade mostly for the emotional high that they receive from excitement and the action of the markets. Trading on emotion with a must-win, winner-takes-all attitude as opposed to a methodical, principles-based approach is indicative of gambling. And it's never going to lead to success over time. In summary, gambling's an addiction, while trading should be viewed as a professional pursuit. So I want to ask you something. Are you a trader or are you a gambler?